Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, a quick video about some of the latest news in the gold and silver markets, including an article from Craig Hemke last week, who you probably already know. He's been on the show a couple of times, wondering if we are headed towards some sort of problem on the Comex. And we'll dig into that as well as all the other fascinating things that are going on. I'm darn glad to be here with you tonight. It is Monday night as I'm recording, and I know I always say I'm excited about what's happening, but geez, fascinating things going on. And more, it keeps reminding me of what I've read about the London gold pool. So let's dig in. As you can see here on our investing.com ticker, we got gold at 1703, silver right around 1540. And let's dig into our top story here of the broadcast, because Comex search and seizure, this was Craig Hemke. This was from last week, so you may have caught it already. But I had a few thoughts here that I wanted to pass along, because as you know, if you've seen any of the interviews that I've had done with Craig on the channel, or if you're out there listening to the Big Silver Short audio, yeah, that's right, great book that just came out. More information about that at the end, although it is available on the arcadiaeconomics.com website. But nonetheless, Craig mentioned it in the book. He's mentioned it on the interviews in the show, where I'm coming from the perspective that really ever since 2011, it didn't make sense to me why the metals fell. And short version, if it was because bankers if it was solely because bankers sold paper gold and silver that they don't have to drive the price down, I've always looked at, well, then natural demand seemed to be north of 50 until that happened. And that was what the book was really about, to investigate whether that view was correct. I think it is, and I think what's in the book is unfolding now. Although whenever I've mentioned that to Craig, I don't think he disputed that someday that ultimately would happen. Although Craig has always been more of the opposite side, saying he didn't think we were close. Certainly something I factor in, that I know all of you watching at home listening, is that when someone says every day silver's going to $50 tomorrow, gold's going to $5,000 tomorrow, I think those things go as far as to say inevitable, although I've tried to always be careful about not proclaiming something like that until I had valid reason to do so. So again, the point being that, to me, like when I hear people like Craig change what they're seeing, and maybe I could have read this quote before, but if you saw it highlighted there, here's Craig last week. Will these banks be able to scrounge up enough physical metal to keep their scheme afloat through June? That's really different than I've heard from him before, except in the past couple of weeks. A couple highlights here. In short, with an unexpected global supply squeeze, the Comex was caught without enough deliverable metal. So as the supply squeeze continues, with many mines and factories still shut down, the Comex should expect these delivery issues to continue in May and June. Already we're seeing open interest. And then what will happen if this number surges? So again, we don't know exactly how it's going to play out, but you have a situation already fragile and vulnerable, now made more pressurized. Wonder if that's a word. And what will happen the next delivery month of June if we see more delivery requests? You also have that factor that comes into play, like once the sharks start noticing blood in the water, because you have a vulnerable system that, it's a little bit of a prisoner's dilemma. I'm full of metaphors today, as you can see. But certainly I think if another bank can make a profit by squeezing someone, they certainly will do that. So, or another country. And here Craig mentions, you continue to be told by system apologists, the gold is there, it's just in the wrong place. this is the alleged reason for the spread in price and issues at the Comex. Then why is that the case in silver too? Also, he mentioned something, I don't know if I commented on, you may have seen it, Bullion Star, my man Ronan Manley, excuse me, has been doing some great reporting. He had this last week, for CME Group doing confidential treatment request. Disclosure would likely cause competitive harm to the Comex. Who knows what they're slipping in there? Although I think you can sum it up without needing to go to law school and be able to translate that message. It is all one big massive scam that more and more I think is finally unraveling. I don't think a lot of these things we're talking about one day anymore. I would, at least for my own trading activities these days, and more to come about an option quantitative group I've been starting. Interesting stuff. But I mean, at least, and I'm not saying to go out and trade anything based on this, but when I think of what's happening, to me, the probability of some form of, again, it reminds me of the London gold pool, but however it unfolds, but certainly a significant price increase, you would have to think is well above 50%. I guess you wouldn't have to think that. I think that that's more based on feel and just all the conversations rather than anything mathematical or quantitative. So take that as you will. But let's dig into some of the reasons why. And you can see here that I'm excited because this is just some fascinating things happening. Here's the latest weekly transparent silver holdings. Thank you to Nick Laird of Gold Charts R Us. Great service. Go sign up now. You can see these blue bars at the bottom. So that's 5 weeks in a row now. We've had significant, maybe like 3 out of 5 weeks, but some big chunks going into, these are the silver ETFs like SLV. Similar situation with gold where we saw this massive spike last week. Still a lot of gold going in there, slowed down a little bit. Palladium and platinum, it's interesting, has been the opposite. Metal coming out of palladium. Perhaps next time I have David Jensen on the show, we could dig into that. I wonder if that's because it's just reached that point where people need the metal, and not sure, but will be interesting to follow. You can see I pulled up platinum here just so you could see that again. Platinum metal reportedly coming out of the trust. I say reportedly because I think it's a reasonably legitimate question whether the metal is going into these trusts as advertised. I know a lot of people have raised questions there, and yeah, especially now where you see the price of physical gold and silver continuing to diverge from the Comex. And here's a special thought of the day that's popped up in several conversations, but I've heard several times a rumor that Steve Mnuchin may be authorizing the mint to pay 50 cents over spot to get more silver. Let's be clear, that is a rumor that's not been confirmed. So I don't know if that's actually true, but especially when, or what you can confirm is that dealers are paying over spot. So the real bid is over spot. In fact, the online dealers, I was looking today, even junk silver, $23 plus. So, I mean, if the price is really diverging, you really have a situation where either A, what the Comex is telling us is kind of meaningless. It'd be the same as if we ran the crisp price of silver. And, I just said, well, silver in my world is worth $80. Well, I may think so, but if someone can buy it for, 23 or 24, they're probably not going to pay 80. So, I mean, maybe it'll just be a meaningless number. Or I guess the longer these premiums stay elevated, and especially if that continues to increase the premium level, especially what dealers are paying above spot, something I'm digging into more, but that creates an ARB, and I guess we'll see if there really is any physical delivery mechanism to the Comex, because if you can buy it for 15 bucks there, simultaneously sell it to a refiner or lock in. I mean, in the book, Andy Sheckman of Miles Franklin mentioned how in 2008 they thought they were going to go out of business because they simply couldn't find any silver. So, I mean, it's a tricky, not the easiest supply chain, but if that spread gets big enough and basically people need the metal, well, it will be interesting to see what happens. You would think on some level, any amount of delivery you can take from the Comex. And again, you saw that that's coming to a head in the opinion of Craig Hemke. Here's another chart I bet most people would be stunned if they'd seen before. This is that same silver chart, but over about 10 years here. What I find interesting is that if you trace it back here to mid 2011, right around the time the price was coming down, you had about 700 million ounces. And so as the price, you can see the price here. So there's $50 on this gray line. So here we see the price falling. And similar to what I know many of you have seen me talk about it, or how in 2008 you had Bart Chilton mentions how JP Morgan increasing their position and silver plummets from 21 to 9 days after the takeover of Bear Stearns, while there was a shortage of metal and, similar conditions to now. But you see this again. I mean, we're seeing it happening now, but also if you take a step back, really on those last 9 years, while we've seen silver get pounded from 49 all the way, I guess this last month in March when it went down below 12. Would have guessed was the low, but I guess we're seeing it here. And all that time, yes, even before the rally began last year, silver went from 700 million ounces to a billion. So basically almost a 50% increase before jumping up. This was a huge chunk last year. This is about 120 million ounces. And I remember asking Ted Butler about 2010 and 2011. He said the main driver, in his opinion, for silver going up to $49 then was that 60 million ounces had been added into these ETFs. Here you see 120 million ounces. And I remember asking him, if I had told you 120 million ounces was going to go into the ETFs in a couple of months, would you think it's possible the price would be anywhere near $15 or $20? To which he did not think so. Hopefully we'll have Ted back on the show soon. It'd be fun to catch up with him. But now you see again with these recent inflows that we've been talking about, that number has spiked up again. So I mean, we're kind of eyeballing it here, but looks like now you can see we're up to 1197. And if you call this point in beginning of 2019 a billion, that means another 200 million ounces have gone in over the past year. So maybe we will see another rally starting this year keep in mind, last year's rally began I believe the low may have been May 29th. It was somewhere towards that last week of May. Actually had a couple well-timed option purchases, believe it or not. And it's interesting because you really had that COT pattern hold, which we can take a look at here, where banks get long or flat, price goes up, banks get short. Here you can see the silver chart. You can see they've been reducing their short position, this red line, as that gets closer to the zero mark. So quick look at gold here. Still pretty short the banks. You can see that red line there. So something in the pattern changed right as I started trading it. Darn it! Such is how these things go. But anyway, in terms of a few news items of why would people be buying gold and silver, funding exhausted for $350 billion small business paycheck program, states burn through cash for unemployment payments. So certainly, again, is a very unfortunate situation. And your heart goes out. You see people on the unemployment line there. And I think it's unfortunate that we have a government that's squandered so much and stolen so much wealth, because here you have a situation where if we really had a strong economy, I'm sure there's a lot of people that could use some help out there right now. So sending some good warm prayers out there and hoping all are well. And just a reminder to be kind to your neighbor, which I'm going to heed myself as well. I like to think that I heed that every day. Some days we get it better than others, but another interesting note that happened today: U.S. oil costs less than zero after sharp Monday sell-off. Maybe when Kranzler comes on this week, we can check in with him, because Monday, I believe it was the front month contract, ended at negative 37.63. Let's see, refineries, storage facilities, pipelines, and even ocean tankers have filled up rapidly since billions of people around the globe began sheltering in place. Quite stunning. In fact, I know I have a lot of tangents and stories today, but I remember actually talking to Porter Stansbury in 2012. It's right after I'd left Wall Street. He told me back then oil would hit $40 in a couple of years. Thought he was insane. And now we have oil going into negative territory. Monday's trading was exacerbated by the looming expiration of the May futures contract. So, by all means, I'm not going to claim to be an expert in what happened in this oil situation, but just another example of how you have commodities being priced in paper contracts and bank shenanigans rather than what's really going on. So see how that plays out. Quick note here, this was out there a week or two ago. As you see my player slowly loading. Episode 9 of Live from the Vault. Andrew McGuire had some commentary on there, matched something that I've heard in a few other places. He was saying that 2 market makers got blown out on the LBMA back on March 24th. I would believe that is true as he's reporting it. I don't know if there's I don't know how you can confirm officially some of these things because they don't tell you these days. And who knows even what you trust from Reuters or some of these other places. But I thought that was interesting. I had another note of something of Andrew's to pass along. And let's see if I can still maintain some witty banter here while I dig it up. Come on, baby. Where is that note? Well, that was the main one. So I guess that's another great reason. Hit that subscribe button and the notification bell. So if I remember the other takeaways I had from Andrew's video, you can check back in and get those at some point. But I have been in contact with Andrew. Hopefully we will have him back on the show shortly, because I mean, it's again the same theme that so many others are reporting, and not that any one person knows exactly, and it's not a perfect science yet. To me, I just pay attention to people who are close to the situation and discuss with them or listen to what they read and write. And certainly, a lot of these things are happening now and not helping. U.S. Mint closes West Point, indefinite shutdown. Another Ronan Manley article here. And conclusion, this latest production shutdown by the U.S. Mint also comes on the back of other recent production shutdowns and production scalebacks that have affected everything from the Royal Canadian Mint in Ottawa to the world's largest gold refineries in Switzerland and to South Africa's Rand refinery. While some of the Swiss refineries have restarted production, this is to a limited extent. All right. Sounds like that is going great, unfortunately. Anyway, the last note, here we go, the big silver short audio. I did do a book about all this stuff that's happening. Fortunately, I started about a year and a half ago and really investigated all these topics in the silver market. Is there more paper leverage out there? Is this headed to the short squeeze of a lifetime? I still think it is, and it seems like it's happening now. In fact, we rushed to get the audio version out so that you could have the information before it unfolds. As soon as I get this video posted, I'm going to be back doing some final edits to the print version. I do sincerely apologize to everybody I've given an estimate to in the past year of when I thought it would be out. Learning firsthand, a book takes a little bit longer to do than I thought. So, but I'm gonna, if I can keep my eyes open, finish those darn edits tonight, and I think it's quite close. Hopefully, maybe even begin printing it by the end of the week. We'll see how it goes. Again, I appreciate your patience. But hopefully, all these updates in the meantime have made it worthwhile. And I thank you, as always, for watching tonight. And if you want any further clarity on any of this, just stay tuned, because Andy Scheckman is about to tell you what is going on the dealer side of all of this.